There are two companies you've probably never thought about that own pieces of almost everything in your life. The phone in your hand, the car you drive, the medicine you take, the food you eat, the news you watch. Behind all of it, BlackRock and Vanguard. I'm Ian Snap, and today we're diving deep into the most powerful companies you've never heard of. BlackRock and Vanguard collectively manage 18.6 trillion in assets. To put that in perspective, that's roughly 2/3 of the entire US GDP. They're the largest shareholders in 90% of S&P 500 companies. They have massive stakes in competing companies within the same industries, and most people have no idea they exist. So today we're answering the big questions. How did they get this powerful? What do they actually do? Do they control corporate decisions? And should we be concerned? Disclaimer: this isn't a conspiracy video. We're sticking to facts, public data, and expert analysis. But I'll warn you, once you see this, you can't unsee it. If you find this valuable, smash that like button and subscribe. This is the kind of content YouTube doesn't always promote, so your engagement really matters. Let's get into it. Who are they? The basics. First, let's understand what these companies actually are. BlackRock, founded in 1988 by Larry Fink and 7 partners. Headquarters in New York City. Assets under management, $10 trillion as of 2024. What they do? Asset management, managing money for pensions, governments, institutions, individuals. Investment technology, Aladdin platform, used by many other firms. Risk management, financial advisory. Key products, iShares, ETFs, including SPY competitor IVV, mutual funds, institutional investment services. Employees, 20,000 Sudan worldwide. Larry Fink is still CEO and is one of the most influential people in global finance, Vanguard. Founded in 1975 by John Bogle, who passed away in 2019. Headquarters in Malvern, Pennsylvania. Assets under management, $8.6 trillion. What they do? Primarily asset management. Pioneer of index fund investing. Known for ultra-low fees. Key products: Vanguard, Total Stock Market Index, VITX. Vanguard S&P 500 ETF, VOO, target retirement funds, hundreds of mutual funds, and ETFs. Employees, worth is $20,000. Unique structure. Vanguard is actually owned by its funds, which means it's owned by its investors. This is different from BlackRock, which is a publicly traded company. So both are asset managers, but their structures are different. BlackRock is profit-driven and publicly traded. Vanguard is client-owned and structured to return savings to investors through lower fees. How did they get so big? The rise. So how did two companies end up controlling nearly $20 trillion? It comes down to one thing: passive investing. The index fund revolution. In 1975, John Bogle launched the first index fund, the Vanguard 500. The idea was revolutionary. Instead of trying to beat the market through active stock picking, just buy the entire market at minimal cost. Wall Street laughed at him. They called it Bogle's folly. Who would want to guarantee average returns? Because over time, index funds beat 80-90% of actively managed funds after fees. As more investors realized this, money flooded into index funds and ETFs. Vanguard grew. BlackRock, which acquired iShares, the ETF giant, in 2009, exploded in size. The pension and institutional wave. It wasn't just retail investors. Pension funds, endowments, sovereign wealth funds, they all shifted to passive strategies. Why pay a fund manager 1-2% annually to underperform when you can pay BlackRock or Vanguard 0.03, 0.20% to match the market? This created a virtuous cycle. More money flows into their funds. They get bigger and can charge even lower fees. More money flows in repeat. The 2008 crisis accelerator. The 2008 financial crisis was a massive turning point. Active managers got destroyed. Investors lost faith in experts picking stocks. Meanwhile, index funds just tracked the market down and then back up. Simple, transparent, low cost. BlackRock also became the go-to crisis manager. The US government hired them to help manage toxic assets from Bear Stearns and AIG. This cemented their reputation as the smartest guys in the room. What do they own? The web. Alright, let's get specific. What do they actually own? The big tech overlap. Let's look at the largest companies in the world. Apple, Vanguard, 8.4%, largest shareholder. BlackRock, 6.4%, second largest. Microsoft, Vanguard, 8.2%. BlackRock, 6.9%. Amazon, Vanguard, 7.8%. BlackRock, 6.2%. Google, Alphabet, Vanguard, 7.5%. BlackRock, 6.5%. Tesla, Vanguard, 7.1%. BlackRock, 5.8%. Notice a pattern? They're always the top two shareholders. Competing companies. Here's where it gets interesting. They own major stakes in direct competitors. Airlines, Delta, Vanguard, 9.1%, BlackRock 8.3% United, Vanguard 8.7%, BlackRock 7.1%, American, Vanguard 10.2%, BlackRock 9.1%, Banks, JP Morgan, Vanguard 8.0%, BlackRock 6.8%, Bank of America, Vanguard 8.5%, BlackRock 7.2%. Wells Fargo, Vanguard 8.7%, BlackRock 7.5%, Pharmaceuticals, Pfizer, Vanguard 8.9%, BlackRock 7.7%, Moderna, Vanguard 7.2%, BlackRock 6.1%, Johnson & Johnson, Vanguard 9.0%, BlackRock 7.8%. Media, News and Entertainment 2, Comcast, NBC, MSNBC, Vanguard 8.0%, BlackRock 6.5%, Disney, ABC, ESPN, Vanguard 7.6%, BlackRock 6.4%, AT&T, formerly owned CNN, Warner, Vanguard 8.2%, BlackRock 7.0%. You start to see the web. They're in everything: energy, defense, retail, food, healthcare, every major sector. Do they control these companies? The power question. Here's the trillion-dollar question. Does owning 7 to 8% of a company mean you control it? The conventional answer. The finance industry will tell you, no, they're passive investors. They just track indexes. They don't make decisions. And technically that's true for most holdings. Index funds don't actively choose what to buy. They automatically buy whatever's in the index. But the voting power. Here's the nuance. When you own shares, you get voting rights, and someone has to vote those shares at shareholder meetings. Who votes for BlackRock and Vanguard's shares? The proxy voting teams. These teams vote on board member elections, executive compensation, mergers and acquisitions, corporate policies, climate, diversity, governance. In practice, BlackRock and Vanguard often vote with management. They're not activists trying to shake things up, but their sheer size means their vote matters. If BlackRock's 7% and Vanguard's 8% vote together, that's 15% of the company, often enough to tip close decisions. The influence. BlackRock's CEO, Larry Fink, writes an annual letter to CEOs. In recent years, he's emphasized climate risk and sustainability stakeholder capitalism, not just shareholders, long-term thinking over short-term profits. When the manager of $10 trillion tells CEOs what he thinks, they listen. Not because he'll sell. He can't, he's tracking indexes, but because his public statements influence investor sentiment. The common ownership concern. Economists have raised a concern called common ownership theory. The idea: if the same investors own major stakes in competing companies, those companies might compete less aggressively because harsh competition hurts both companies' stock prices, which hurts the shared investors. Example: if Vanguard owns Delta and United, would they really want them to engage in a brutal price war? Both airlines' stocks would tank. Some academic studies suggest common ownership correlates with higher prices in industries like airlines and banking. Other studies dispute this. The jury is still out, but it's a legitimate question. Is this good or bad? The verdict? So, is this concentration of ownership a problem? Let's look at both sides. The case for it's fine. Passive investing democratizes wealth. Index funds let regular people access diversified portfolios at low cost. This is good for average investors. They don't actively control companies. 7-8% ownership isn't a controlling stake. Management still runs the show. Competition still exists. Companies still compete fiercely because executives' careers depend on performance. Vanguard especially is investor-owned. Their structure means profits go back to fund investors through lower fees. That's consumer friendly. Efficiency. Having large, sophisticated investors brings stability and liquidity to markets. The case for it's concerning are thought unprecedented concentration. Never in history have so few entities owned so much of so many companies. Common ownership reduces competition. If the theory is right, consumers pay more because companies don't compete as hard. Political influence. $18 trillion gives them enormous leverage over governments and policy. Systemic risk. If BlackRock or Vanguard faced a crisis, the entire global financial system could be affected. Circular ownership. Vanguard owns BlackRock shares. BlackRock manages Vanguard index funds. Who really owns what? What this means for you. So what should you do with this information? As an investor, keep using index funds. BlackRock and Vanguard funds are still the best way for most people to invest. Low fees, broad diversification, strong track records. Understand what you own. When you buy VOO or IVV, you're indirectly owning thousands of companies, and you're part of this system. Diversify across fund families. You don't have to put everything in Vanguard or BlackRock. Fidelity, Schwab, and State Street also offer great index funds. Stay informed. This landscape is evolving. Be aware of who controls the companies you invest in. As a citizen, demand transparency. Proxy voting should be more public and accountable. Support competition. Encourage policies that promote actual market competition, not just the appearance of it. Think critically. When you see corporate trends, like every company suddenly prioritizing the same issues, ask, is this organic or is it coordinated investor pressure? BlackRock and Vanguard are the invisible giants of modern finance. They don't make headlines, but they shape the economy in profound ways. Whether you think this is brilliant efficiency or dangerous concentration, one thing is clear. Understanding who owns what matters, because ownership is power. If this video opened your eyes, hit that like button, subscribe for more deep dives into how money and power really work, and drop a comment. Did you know about BlackRock and Vanguard before this? What do you think? Is this a problem or just modern finance working as intended? Share this video with someone who needs to understand how the financial world really works. Knowledge is power, and this is knowledge most people don't have. Thanks for watching. I'll see you in the next one.